So professional investors put a lot of emphasis on equity risk premium. It's the excess return that investing in the stock market provides over what they call the risk-free rate. Joining me now to discuss Main Street Asset Management Chief Financial Officer Aaron Gibbs. And Aaron, so what does ERP, the premium right now below where it was even during the global financial crisis? What is that saying about the market?
Well, it says a lot about the interest rates that we're seeing in the bonds, because that's the risk-free part. So stocks need to be above and beyond that. So when you have really high yields, yeah, that's going to be a much tougher hurdle. And that right there is not indicating a buy. That is a low.
This is a low. So we actually need this to be going in this direction.
Yeah, like way up there, and that's the buy signal.
When it's down this low, though, it seems like it's a screaming sell. I mean, does this mean just essentially that the risk is not worth it right now?
Right. And so what it's saying to asset allocators in particular is you want to be overweight in your bonds and have less stocks. You're not going to be overweighting in your stocks. And so we've been talking a lot about, shorter duration and long duration, and this is really saying buy your bonds and leave your equities off the table.
Now, there is one sector, though, I think you said you kind of like here, utilities. I thought they were extremely expensive earlier. They formed a double top toward the end of the summer. In terms of relative, also versus the S&P, they were near all-time highs. So they were safe, but in a way they were expensive. They've come down and they're turning here. You still think so? You think they're worth the buy here?
Yeah, I think utilities act a lot like bond proxies. So as if your rates are coming down, your prices are going up, you're going to see prices going up in your utilities as well. And it's also just a good defensive play as we're getting a little nervous between this risk on, risk off. Since we've saw that peak in October, the utilities are that contrarian play.
You buy an index or you buy utility stocks?
The index.
Right.
Yeah, I mean, they trade so closely together anyway, but yeah, definitely.
I've got NEE, which, by the way, is extremely expensive. I got it from our subscribers. They're up about 15%. I'm going to hang in there because I think they're just going to be a big winner in this whole solar thing, right?
Solar's whole nother ball game.
A whole different ball game.
Yeah.
So I've got the U.S. aggregate bond ETF, but you're saying be more specific. This is too much, right? This has got everything in it.
Right.
I mean, it's come down dramatically.
Yep.
We're starting to turn up here. You can kind of see where, at the very least, you can get a trade in this thing. I think we had a guest last week who was looking to trade this, but if you want to go longer, you want to get something more specific than this.
Yeah, and I would say longer duration. Another option also is the direction bonds. So they're 3 times bull, 3 times bear. So given now that you're probably in more of a
You
bear,
go 3 times, one of those 3 times
yeah, I mean, look, they're quick and fast trades, very easy to get in and out. If you're thinking purely short term, I think you get a little more bang for your buck. I think that, look, we know that the bond prices are most likely going to go up, at least for the next couple weeks. And so that's just our way to get a quick flip trade.
Overall, we had an impressive, we came off the canvas. It was like Rocky-like on Friday, and now we're knocked out. Nothing's coming off the canvas today.
Yeah.
What's the message right now with this market? What do you feel?
I felt like the sort of the recovery was petering since the beginning of, this sort of Thanksgiving period. I think we're going to see a lot of risk on, risk off, a little uncertainty until we get that Fed meeting.
So this will be another failed bear market rally?
I don't know if
Or is it too early to say that?
Yeah, I don't know if it's necessarily going to be failed. I think everybody's sort of holding their breath until the Fed meeting and getting more of those minutes. And I think that's those last couple weeks is really what's going to push us for year-end.
Hoping that Jay Powell this time around will come to the rescue. Fingers crossed. Hope you had a great weekend. Thanks a lot, Aaron.
Thank you.